If you own rental properties, the tax code changes coming in 2025 could cost you thousands or save you a fortune if you know what to do. Today, I am sitting down with 1031 exchange expert Dave Foster to break down exactly what's changing, how it affects your bottom line, and the strategies you need to implement to protect your wealth. I'm Melissa Nash, founder of Lady Luck Investments and your host of Passively Rich with Rentals. I have helped over 2,000 clients build rental portfolios using my lazy investor approach. And today we are diving deep into the tax moves that separate smart investors from everyone else. Let's get into it. Welcome to the show, you guys. I am very excited to have a special guest on today. We are talking about 1031 exchanges, and I've got the one and only Dave Foster here. Welcome to the show, Dave.
There's a lot of people that are happy it's one and only. I'll just tell you that. But it is great to be here.
Wonderful, wonderful. So we were just chit-chatting for a second before I hit the record button, and I have known you for at least 10 years, I want to say.
It has been quite a while, hasn't it? I think we first got introduced in the early days of the turnkey property boom. I believe you were just starting out with your company and turnkey providers were cropping up everywhere up around the country in certain regions. What I really liked when we started working together was you guys truly were nationwide. And so that's one thing we noticed right off the bat. You were able to take care of clients anywhere, which of course fits in well with us because the qualified intermediary in a 1031 exchange can work with anybody as well. So it was really just kind of a nice fit together from the early days. So like I told you, I think we've each earned Thanksgiving Day invitations for each other.
That's it exactly. So, one thing that I believe in firmly is I do what I am telling other people to do, and I work with who I am actually recommending. So, personally, on my own side of things, my own portfolio, you guys, your company has helped me with 3 1031 exchanges. And I mean, I've been recommending everybody work with you guys for at least a decade now because of how easy it is. Everything I do is so that I can be as lazy as possible. That's kind of like my joke about things, but like I am a passive investor. I am busy. I am growing a portfolio, I'm raising a family, I'm coaching students. I have a lot of hats that I wear. And to be able to come to you guys and be like, "Hey guys, I'm thinking about selling a property. Can you just take it from here?" has been absolutely fantastic. And if I can do it, you guys, anybody can do it.
You know what? It's funny that you say that because you might even remember our first conversation when you were going to do your first one. I told you something that I've told every potential client, and that for 30 years now. And that is that the hardest 1031 you'll ever do is your first one. Once you get through that, it's like, oh my gosh, what was I missing all along? Because the benefits are just so out of this world. And you're exactly right. It really is kind of an invisible, seamless process that your team picks up and carries the water for. So you can do the important stuff.
Yep, yep. So let's break it down and go basic level. So, for everybody listening right now, like, what the heck are we talking about? What is a 1031 exchange? Why have I done a 1031 exchange? Why do investors need to know about this? So, fill us in from the very beginning, day, basic level.
Exactly. Well, one thing that you might not even know is that 1031 has been around since 1920. So it's not a new thing at all. But what it does is the 1031 exchange allows you to sell investment real estate, use the process, and buy new investment real estate, and you get to indefinitely defer paying tax that you normally would on the profit. So think about that. I'm a real estate investor. What's my job? What's my passion? I want to sell and I want to buy real estate. That's who I am. All you're doing with a 1031 exchange is adding a process in between. And that allows you to not have to pay the tax that you normally would have. Now, what's the impact of that? Well, let's say you make $100,000 and you're a California taxpayer. You could easily have a $40,000 tax bill. Oh my gosh. Instead of paying that, doing the 1031 exchange, you get to use that $40,000 of tax for your benefit. You're making the money on it. Now, Bliss, I don't confess this to everybody, but the biggest mistake I ever made in real estate was my first transaction. Bought a piece of property and I actually had a $30,000 tax bill because I did not do a 1031 exchange. Now, fast forward that 35 years. And if I would have made 10% a year on that $30,000, it would have doubled about 8 times. That's real money. And instead, I just get to cry myself to sleep at night, knowing that I took care of the government, so I didn't have to pay them. That's, in a nutshell, what it really is. But the IRS doesn't make it easy for you. They, first of all, and most importantly, require that you use the services of an unrelated third party called the qualified intermediary. And that's how you and I got involved because you had to use a QI. And that's what we do is we're that middle person that makes sure the 1031 happens correctly.
Well, and thank you for kind of recapping that for us. So, one of the things that I love is I don't have to deal with that. There's a lot going on with, like you said, like how the government wants everything to be filed, how it needs to be done, when it needs to be done, the timelines, because Uncle Sam wants their money. I mean, they want to tax you. They want that capital gain. And so for me, like if I had to deal with it and file it and all of that, I probably wouldn't do it. Either A would be really worried and nervous to invest because what if I have to sell it and then I'm gonna have capital gains and blah blah blah, blah all the things. And so to kind of hand that role over to you guys is it's really that easy, you guys. So tell us, Dave, when does an investor need to get with you guys if they're thinking about selling a property? When should they be talking to you?
Yeah, well, and this is kind of the whole philosophy behind the 1031 exchange is that it's the long game because every year that you can keep that tax deferred, that's a year you're making the interest on that money. So 1031 investors typically tend to have a much longer time horizon. And the 1031, in fact, isn't for people who simply want to do fix and flips and that kind of thing. Your intent has to be to hold the property for productive use. So it's really designed for buy and hold investors. Now, that being said, we work with a lot of fix and flippers to help them adjust their model so that they're still getting the same benefits. But in general, it's got a longer time horizon. When you are dealing with longer time horizons, or when you're sailing a bigger ship, it takes longer to turn it around. So we encourage people, first of all, you've got everybody else on your team. You've got your market analysts that are telling you what the market's doing. You've got your accountant that tells you what your taxes are doing. You've got all of these people giving you input. And the 1031 QI needs to be one of those people so that as you're planning early, probably before you even decide to sell a piece of property, you want to be looking for the off ramps that are going to optimize your experience. Now, all that being said, what does a QI have to be involved prior to the closing of your sale? And again, one of those things I shouldn't say, but I'll expose it here. Our world's record is 22 minutes. But thank heavens it was not you. And I got a lot of gray hair from that transaction. So anytime before the sale, the earlier, the better, because that helps you plan.
Yep, exactly. And so I've talked to a lot of clients who said, "Hey, Melissa, I just sold my property and I want to do a 1031 exchange. And can you help me, number one, find a replacement property?" Yes. Hello. I can help you find replacement properties. Absolutely. That's what I do. Stress free, chill. But then they're like, what's my time frame and all this stuff. And I'm like, wait a minute. I think you're too late. You've got to talk to the 1031 exchange folks like yourself before you sell that property. You guys have
That's
to
right.
file stuff, right?
Yeah.
So,
The client cannot touch the money, and there has to be documentation with the closing settlement statements. But I learned this the hard way a bunch of years ago. In the northeast part of the country, and you probably found this out as well, there's kind of a convention where people will say, I sold my property. And what they really mean is, I just put my property under contract. And I get those calls every month. I go, please tell me you didn't close on it. Oh, no, no, no. It's just under contract. Okay. We can still do the 1031. But you're right. If they've already closed on the property, all I could do is sit there with a Kleenex and help them cry.
yeah, that's a big mistake to be had because now all of a sudden, sorry, especially if you live in California, you might be paying 30 to 40% capital gains on that property. Yep, I'm there with the Kleenex too. That's a big bummer. Okay, so tell everybody when people talk about 1031 exchanges, it sounds like a scary thing. So, what is the timeline? Okay, first of all, let's back up and say so somebody's got a property under contract that they're selling. They reach out to you guys. You guys make sure they have all of the information that they need. You're going to file everything with the closing documents. You guys are going to put the funds in your escrow account. And I know this because I've done this with you guys several times now. You guys take those funds. So now what? What is the timeline? What are the requirements for this person?
Right. So by doing just that right there, you've kept your 1031 alive because you're using the services of an unrelated third party, the QI. So check box number one. There's 6 different boxes. Now, boxes number 2 and 3 are the timing. And it is a little constrained, but generally I can talk people off the ledge because you only have 45 days after the closing of your sale to identify your potential replacement properties, which everybody starts flying around the room saying, that's not enough time. I can't do it. Well, wait a minute though. Remember, you contacted us prior to the closing of your sale. And that's again that element of planning, where if you're 30 to 45 days before you have to close your sale, that means you really have 90 days to find your replacement property because you could go into contract on the new property before your own property closes. You just can't take title to it. So right away, we're able to kind of calm people down, let them take a breath. And also, if it is a problem, like remember that extreme seller's market in California 6 or 7 years ago where you couldn't buy a property because it was being sold within hours for 20% more than it was listed for on the day it was listed. Well, that does make it tough and scary, but there's all sorts of things that you can do to mitigate that, including starting early, offering concessions or giving concessions in exchange for floating closing dates, longer closing dates, putting a property under option to purchase before you have to buy it. All those kinds of things can work together. And that's where we help you with in that process. The 45 days by far is the scariest of the requirements. Now, you have a total of 180 days to close on it. That's not so bad unless you're buying, say, new construction. Do you guys have some new construction projects right now that are in
Yes,
process?
we
Yeah.
absolutely do. Yep.
Yeah. So what will happen is those may have been under process for 8 or 10 months, and they're 3 or 4 months from being completed. So one of our clients could sell their property and they would list one of your new builds as the replacement property. Now, why would they want to do that? Well, the biggest reason right now is because the move from existing construction that might have hit CapEx, the expenses coming down the pike, into new construction where you've got a warranty and those kinds of things. That's a great reason to switch because CapEx will kill your return. So, but they'll identify that even though it's not done yet. Well, the only thing is now it's got to be done by day 180, and then you close on it. No problem at all. But again, tips and tricks to help you navigate those kind of time frames. The QI has to hold your money. And as you're well aware, the way that we do it is we set up individual accounts in each client's name. So money can't leave your account unless you sign a document. So, which is all good until Melissa decides to go on vacation to Italy the week she's going to close. And then we're scrambling around trying to get that document signed because we have to have the signature to send money. But that protects you both from the IRS because they don't want you to touch it, and it protects you from us because it doesn't happen very often. But once every decade, some Yahoo just goes crazy and takes a bunch of 1031 investors' money. If we have it set up so you're still in at least partial control, that can't happen. So again, that eases people's minds. Oh, especially when they realize that it's FDIC insured. Well, now I'm starting to feel a little better about the 1031, aren't I? You've got to take title the same way in which you sell the old property. So I think for you, sometimes you had it in your name, but sometimes you also had it in an entity like an LLC. That's okay. We just match that up. The final one is the reinvestment requirements. And this gets people. If you want to defer all tax, you've got to first purchase at least as much as your net sale. So if you get a contract on a property for, let's say, 320,000, and there's $20,000 of closing costs, that makes your net sale $300,000. You have to purchase that much in real estate. And if there was a $200,000 loan on it, then you have $100,000 of cash that you need to use all of to purchase $300,000 of real estate. People say it's hard to get because the IRS did not make it easy on purpose. They're willing to leave their tax in the game, but they're expecting you to leave everything in the game as well. So if you pull money out or if you buy less than you sell, they say you're taking profit first. Now, Melissa wants to say, no, I'm not. I'm taking up my original down payment. And I totally agree. Unfortunately, the IRS says, nope, it's profit first. And you'll pay tax on that amount. So that's probably behind the 45 days. The second biggest gotcha is that people have to understand how much they need to purchase so they don't end up with a little tax bill at the end. But honestly, that's really it. In 2 minutes, we just went through every requirement. Now, can you remember all of those? No. Do you want to remember all of those? Probably not. But that's what the QI is there for. We've got a job, just like your realtor has a job, your accountant has a job, and you're the quarterback of the team.
Perfect. Well, you know what? And that's one of the things why I tell people is I'm like, okay, you're thinking about doing a 1031 exchange. Let's get all of the team together and let's start planning it out. So let's say I sent a client to you. Actually, I'd sent it. This is a real story. I sent a client over to you guys recently and they were selling a property and I don't even know, I think it was like 500,000 was gonna be their profit. I mean, that's a huge, huge tax. If they have to pay capital gains, I mean, they're gonna lose almost half of that money. I mean, that's an obscene amount of money that we wanna try to avoid. And so, we had to put together a lender and yourselves, because we want to make sure that's a large amount. So, number one, we want to make sure that when they're leveraging that money, that everything is good on that end. They can qualify for it, the types of loans that they're getting. They're doing a DSCR loan. There's certain requirements there with down
For
payment.
entity, yeah.
Yep, and then also, yeah, then the company name that they were selling it under, like you said, has to align with if they're gonna do a DSCR loan with that LLC, or if we're gonna be titling it in their name. I mean, there's so many, like, there's some little variables, and I don't wanna scare you listeners who are out there. This is why we put these people in place for you. Like, you don't have to be a 1031 exchange professional, and you don't have to know all of this. And of course, you're not a lender, so you're not going to understand all the loans and all the things going on there. So, we're going to put you together with these brains and these people who are on your side. So, we're going to take your exact situation, the exact property, the exact, we'll say estimated proceeds from the sale. We don't know that yet, but we can get the estimated. We're going to put you in touch with Dave and his team. They're going to tell you exactly what is going to be required on the 1031 exchange side, what's going to work, what's not going to work, how many properties you need to buy, what the totals are going to look like. And then we're going to connect our lender over here who's going to say, great, we're going to qualify you for this. If you're not paying cash for properties, we love leverage, and we always want you to buy, build your wealth and buy as many properties as you can. So then the lender over here is going to run the scenarios for you. And then guess what they're going to do for you? They're going to shoot it right back to Dave and his team, and they're going to clarify and they're going to make sure that this will work. And then you're going to come when you're going to be working, whoever you're working with, if you're working with a realtor or if you're working with a turnkey company or if you're working with somebody like myself who actually has the inventory for you, then we're gonna put together the numbers, the sample properties, what it would look like, and then guess what, you guys? I'm gonna send it right back over to Dave and his team, and I'm gonna make sure, "Hey, guys, this is what we're proposing. Is this going to work?" So we're kind of clarifying it all for you, so you're not alone out there, lost, overwhelmed, like, literally Dave, you guys have done thousands of these. I mean, you know what you're doing, I think.
Well, if we don't, we've been accidentally lucky for about 30 years. So, yeah, you know, when you started talking there, I realized one of the things that I'm most proud of in what you and I have been able to do together with your clients is I can't count the number of times whereby involving all of those different parts of the team, we've been able to save clients several percent on their loan and let them buy more using less down payment because of the type of loan that we were able to get. A lot of people, this would be the greatest hack that I think people could take today. What a lot of folks don't understand is that it is perfectly allowable to buy a property using a quote, second home loan, which has favorable interest and a favorable down payment, and still have that qualify for the 1031 exchange. People say, but it's a second home. I can't do that. It's not an investment. Yes, it is. Because when you look at the institutional requirements for second home loans, they will say that you can use the only two requirements are that the property be at least 100 miles from where you live and that you agree to use it at least 2 weeks a year for personal use. Both of those requirements are specifically allowed for a 1031 exchange. You can buy a property and use itself for personal use and still have it qualify as an investment property for 1031. So I remember getting asked that question. And then all of a sudden that opened up all kinds of inventory for you to put somebody into a great property where they were able to buy more because they used less down payment percentage at a cheaper interest rate. They got a vacation home to build memories in, and they're making money on it. And given the new statutes that were finally permanentalized, permanentalized, I don't know what it is, made permanent, whatever that word would be, uh, allowing for ownership of vacation rentals to be treated as an active rental activity, which means you got access now to all sorts of other tax breaks while you own it. It's a 1031 investor's dream, but we were only able to do it because everybody was asking the questions so that we knew where to place it.
Well, you know what? You, like, literally teed that up because I don't know if you remember, my very first 1031 exchange that I did with your team was exactly that scenario. So, I had a property that we sold. It was being used as a short-term rental. We sold that property. I took the proceeds and I bought a another property in Palm Springs that was I was gonna do a short-term rental with it, and my lender was able to do a second home loan on it, so I got only had to put, I think it was 10% down, and I had a really, really low interest rate on it. Because again, this was, like, in 2021 when interest rates were really low, and so we did that, and I then because all of this happened, then I was able to do kinda going off on a tangent, I was able to do cost segregation on this property. I was able to get bonus depreciation on this property, made a huge, huge tax benefit on it, didn't pay any capital gains on this property. And we put a little bit of work into the property, so we brought up the value of the property. I mean, there were so many things that happened with this deal. I mean, if I were to actually sit down and go, okay, well, I literally saved myself about 40 or $50,000 in capital gains by doing the 1031. And then because I only had to put 10% down, we were able to put that money into the remodel. I mean, there's so many things going on about it that this property itself is an amazing case study, which I should probably do sometime and really break it down. But it all started with that. It was talking to you guys about what my options were and then talking to the lender about what my options were and just really putting these brains together to go, how am I going to benefit the most with the systems that are in place? These are tax laws. I mean, we are expected to take advantage of these. We just need the professionals to help us do it.
And there, you said it exactly right. A mentor of mine a long time ago challenged me, and he said, Dave, stop thinking about the tax code as a way the government's using to take your money. He said, that's not it at all. Yeah, the government needs basic services, but think of the tax code as a behavior incentivizer. And if you perform the behaviors they want, they're going to incentivize you by giving you tax benefits. And there's reasons upon reasons why cost segregations, bonus depreciation, short term rental activities, off the 1031 exchange, all of those things, there's reasons why the IRS wants you to do them. You unlocked the key and said, because these are the systems, I'm going to take advantage of them. And guess what? You got an awfully nice reward from the IRS, didn't you?
Absolutely. Well, and that's the thing is we think about the wealthiest people in this country own real estate, and there's a reason for it. There's all these amazing tax benefits. They are created by the wealthiest in this country. These are the tax codes that we have to learn about and take advantage of. So, and the 1031 is pretty awesome. Years ago, I heard rumors of the 1031 going away. But, I mean, it's here to stay. I don't think there's been any changes to it. Like you said, it's been around since 1920?
Yeah. Well, I think there was an attorney, can't remember his last name, but he once said that nobody's personal liberty or property is safe while Congress is in session. So we got to deal with that reality. But you're absolutely right. Under this administration and under every administration for the last 35 years that I've been at this, the 1031 exchange always comes up for question, and everybody says, no, it needs to stay. Interestingly enough, you want to know the whole story about this? In 1920, our country was coming out of the agricultural revolution, and we had a very hungry nation going into the industrial revolution. We needed agricultural output. But if farmers tried to sell their farms to go buy new farms, they couldn't do it because of the high taxation, which kept not only them from growing, it kept young farmers wanting to start farming from being able to buy anything because starter farms weren't available. And that's why 1031 was put into place. And so you just got to look at that and go, well, that makes total sense. Well, it's still the same thing now. Our nation relies on a vibrant, active real estate economy. And as long as that's happening and things cook along, and part of keeping that happening is the 1031 exchange because it can unlocks all of those other benefits and lets you keep the tax dollars working for your wealth. And by the way, for most of our 1031 investors, their goal is to swap it till you drop or defer, 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 and then die. Because again, under current tax law that was just made permanent, when you die owning a real estate asset, your heirs inherit that at what's called a step up in basis, which means you don't ever pay the tax on the profit. Your estate never pays the tax. Your heirs never pay the tax. You can literally use the tax dollars for your benefit all your life, and then they disappear, and your heirs get a legacy of wealth from you. That's how wealth is going to be built in this country, is through that kind of patient game that takes advantage legally of what the government's giving you.
Oh my goodness, that is actually incredible. I did not realize that at all. So I'm really glad you brought that up because the idea here is kind of what you were touching on is so that first property that we were talking about that you guys helped me do is I mean, I have no intentions of selling that property because again, we use it if as and it's also a short-term rental, but if I were to sell it, then I would just do another 1031 exchange on it. So the profits that I have made on that property through the equity, through, renovations, through just the property values going up, there's value there. I mean, if I were to sell it, I would sell it for a lot more than I paid for it. And so I can just take that and take the profits from that, roll it over. And maybe I want to buy an apartment complex in Kansas City or something like that. Then I can just roll it over into that. And then, like you just said, if I wanted to sell then that apartment complex, then I would just take the proceeds and roll it over to the next big project. And then, worst case scenario, like you said, if for some reason I didn't use all of those funds, let's say there was $50,000 hanging over that I didn't roll over, then that is the amount that becomes taxable.
Right. Yeah, that's exactly right. And also, while this is all happening, your tax breaks are offsetting your revenue from the property and then some. So you're really not even paying tax. The government's giving you money to invest and you're not having to pay tax on it. And I was like, I just can't think of a better way to roll things forward on that. There are those people, and usually it's my adrenaline junkies who say, well, wait a minute. If I'm going to have to pay the tax anyways, why don't you just pay it now? Or I need money to live on. I've got to keep buying and selling. If all you do is slow it down a little bit so that you're keeping those rentals for like a year before you sell them, if you ever need money, it's as simple as doing a cash out refinance. Because remember, you got all kinds of equity in these properties. So you do a cash out refinance, that money is free for you to spend. There's no tax on it. And guess who's paying the interest? It's not you, it's your tenant. So that's tax free living income all your life. Again, if you can be patient enough to check the boxes and play the way the government wants you to.
Yep. Well, and going back to that property that we're talking about here, I didn't realize that until you guys told me that. So, when we put some value into that property, so we did a big renovation on it and then the property values went up, I did a cash out refinance on that property. And that money was my money free and clear, and then I took that money and I bought more rentals with it. I bought more properties with it. I didn't live on it. I didn't go buy a boat on it. I actually put that money to work. So, basically, I didn't pay taxes, capital gains on the sale of that property, got into my dream property, then took that money out and bought more properties. Like, I can't think of a better system than that, honestly.
See, you were smarter than I was. I actually took the cash out money and I bought the boat, but then my family and I lived on it for 10 years.
Oh, okay.
You
Well,
bought rentals, so you did much better. I ended up with a boat, which is just stands for break out another 1,000, but we had fun. But yeah, that's exactly right. You can leverage your portfolio as quickly as you want, and you're gonna do it without ever paying tax.
it's brilliant. It's absolutely brilliant. Okay, so this is the call to action for everybody. I would love to introduce you to Dave and his team. I've worked with a bunch of different people at your office. They're all wonderful. They all work with our clients. They great communication. So, if you guys are even thinking about selling a property and you want to kind of figure this out and see if it is a right move for you or what the implications are going to be, what your timelines are, all of that good stuff. I want you guys to talk to Dave and his team. So I'm going to have his contact information in the show notes below. You guys can just honestly just have those conversations and just kind of get the answers. I always kind of say it is, we're lining up all of our ducks in a row. We've got to be prepared. We don't want any surprises. I mean, Dave's team has handled some surprises, but let's give ourselves some time and figure out if it's the right move for you.
And by the way, in our back cave, the phone has a big red light on it that goes off in sirens whenever Melissa and her clients call. So we love working with you guys.
Wonderful. So you guys do that, have those conversations, and thank you again, Dave. I really appreciate the conversation, as I'm sure our audience does, and we look forward to many, many more future 1031 exchanges with you guys.
Absolutely. My pleasure. Thank you.
All right, thanks.